Hello, hello. Good morning, y'all. How are you? Happy Thursday. I'm a little behind today, but good reason. Well, not really good reason, but I went to turn the camera on and it's overcast here. It finally feels like fall in Colorado, which is super exciting. But the sunlight is not coming in my window. So that goes that way. That goes that way. So I had to open some windows and get a little bit of lighting in here. I didn't have time to plug in. I should have just plugged in that lamp, right? Right. Anyway, happy Thursday. I'm glad y'all are here. As you guys log in and you jump on, let me know where you're watching from. Say hey. If you're watching on Facebook, at the very top, StreamYard says give permission for Facebook to use my name. If you push that, then when you comment, I can see who it is commenting. If not, I'm opening Facebook right now to see if I can, I like to cheat. Where's my group? There you are. So yeah, let me know, guys. Oh, people are here now. They're gone. I wonder if you guys can't hear me. Let's see. I'm going to log out and log back. I don't know. Let me know you can hear me because I see people coming and going. And usually that happens when my volume or my sound isn't working. So can you hear me? If nobody says they can, it means you probably can't. Although usually you guys will let me know. There. Hey, Blair, you can hear me? Yeah, I assume. Okay, good. I don't know why I always get worried that my volume doesn't, or that my sound doesn't work. Like there's a mic check before I log in. But until people start talking or start chatting with me, I'm like, is this thing on? So anyway, welcome. As you guys get in, let me know you're here. Thank you. Hey, Blair. Hey, Joyce. I'm so glad you guys are here. Go ahead and start throwing your questions into the chat if you are here with specific questions to ask. We'll go over, there's not a lot of updates to go over. I'll always touch on the things that we've been talking about, the things that are kind of still relevant. But if you guys have questions, definitely ask them in the chat. Those are always the first and the most important ones I want to answer. I have a few that came in throughout the last week that I will use as filler if we need it. Otherwise, my first priority is always y'all, is always you guys and what you guys bring to these sessions. So I am, there I am. Okay. Oh, and Wendy's here too. So Wendy's always good for a few really good questions. So go ahead and start popping those in. I do want to start, you guys. So real quick, I know, but I don't know if y'all know. So today is the end of the fiscal year for our government. Yawn, boring. No, but nothing won't take too long. But today, so don't know if you guys are listening to the news or anything, but they have to pass, there's a few things on the agenda. Today is the fiscal deadline. So if they do not come to an agreement on a budget, then the government is going to have a partial shutdown beginning tomorrow. Everything I'm listening to sounds like they are going to come to an agreement. So we will not have a government shutdown. So I think that's okay. The other thing that you guys are hearing about, the Congress is talking about, is the bill that Biden is really pushing. There's it's the, what is it, 1.3 trillion, a lot of money infrastructure bill. It's called an infrastructure bill, but there's a lot of stuff built into this. So I've been kind of going through there to see if there's anything that affects us, right? Because most of the stuff I don't, from a tax perspective, I don't care about. I try to be informed, sure. So the only thing I can find, you guys, that has been talked about recently in any sort of conversations within our government at the current time is an estate and gift tax law change. It's for, high earners, nothing that really pertains to us. And the reason I say this is because there has been a lot of things that you hear about or rumors you hear about. We've been hearing questions or rumors or thoughts on another round of PPP loans. We've heard another stimulus payment. None of this stuff is actually being proposed in our government right now. All right. And the reason I tell you about the two things that the government is talking about right now, because if you guys do listen to the news or you kind of keep an ear on anything, if they can get through these two things, then maybe they can start talking about other relief, other bills. But right now, preventing a government shutdown is the only thing I believe they will be talking about today. And then after that is getting this infrastructure bill passed, which again does include more than just infrastructure. Don't let it think it's just that, but it doesn't pertain to anything we care about right now from a tax point of view. So it was a Starbucks kind of day, y'all. So I don't know how the weather's been where everyone else is, but here, super hot all summer. And yesterday it rained and it was like 65 maybe. Today it is 60 and overcast, and it's fall weather. So I definitely decided that fall weather meant I got to go to Starbucks. I don't know, guys. No rhyme or reason. There's all, All right, so what else? Okay, I don't see any questions yet. Again, as you're jumping in here, if you guys have tax, accounting, bookkeeping, I always say that with a little iffy questions, please pop them into the chat. That is the number one reason I show up for y'all on these Thursday mornings, is to answer any questions you guys have about tax and accounting stuff going on. In terms of like where we are with tax, with taxes, it is, what is the date? Is it a pumpkin spice coffee? Why, it is a blonde roast with pumpkin and oat milk. I just made it up. It's delicious. Pumpkin spice lattes are just a little bit too sweet for me. So yeah. So, okay. So Joy says, when do we need to start tax planning? Great question. And this is what I was just about to jump into. It's like, what does the rest of this year look like? So right now, today, you guys don't care about this, but we have a tax deadline. It's the extension deadline for trusts and estates. So that's what we're wrapping up today. October 15th is our last 2020 deadline. So individual returns that were extended are due October 15th. We do have a chunk of those left to do at our firm. We just, a lot of times, let's talk about that real quick. So like, why are people filing their tax returns in October? Tax deadline was back in April. Well, there's a lot of reasons that people extend their tax returns and file and take advantage of that extension, the 6-month extension timeline. And a lot of our clients that we have on extension right now are waiting for K-1s from businesses that they're a part of. Because businesses have until September 15th, or had, past tense, until September 15th to file their extended tax returns. And so we end up with a lot of individuals who are waiting on those K-1s to file. We also have clients that just don't want to deal with their taxes until later in the year. Different reasons. But so we have our October 15th filing deadline. It's the last deadline of the year. Hallelujah. And then we will take a few weeks off, not off, but slow down for a few weeks in the November. So for us, November and December, November is where we start our year-end tax planning. So let's talk about that really quick, just the timing of it. So a lot of people think year-end tax planning, and I've had so many clients come to me in the last, not joking, like last 1 or 2 weeks of December, going, hey, I'm ready to tax plan. And at that point, I'm shutting stuff down for the year, right? I'm wrapping up some things. We're, tying bows on stuff. But for the most part, we're done with year-end tax planning by, I'd say, the beginning to maybe the middle of December, depending on the timing of things. Because we want to get our tax planning done early enough to allow y'all time to implement any tax saving strategies or things that we come up with. So let's use a few examples, okay? So let's say we do some year-end tax planning. We started in November. And what we do in November is we look at everything for your picture for year to date, right? So if you own a business, how is your business doing? We'll do some projections for to round out the year, right? For the last 2 years, or excuse me, 2 months. So we'll do some projections to come up with a sound business net income from your business. We'll look at any other income streams you might have. Do you have rental properties? Do you have W-2 wages? Do you have withholding from those wages? What else? Did you make retirement contributions? All these things. So we'll look at all the different moving pieces that you have. And then we'll come up with a bunch, we'll come up with all the strategies that may exist for you to save some tax money, okay? And a lot of times we might come up with 10 tax strategies, but we're not going to implement them all. It's usually, some of them usually conflict, usually one's a little better than the other. Sometimes the tax strategies depend on how much cash you have, right? So there's a lot of different pieces that go into tax planning, but at its very, very basic, guys, yeah, basic, at the very, very bottom level of like, what is the purpose of tax planning? Okay. I just talked kind of about it, advanced tax planning. How do we save money? But the very, very minimum, what you want to do with tax planning is figure out, okay, how much money am I actually going to have this year for my taxable income? How much money have I paid in this year toward my taxes? And what is going to be left to pay for my tax liability? All right. So because we find that if you know that in November, you have a few different options, right? So if I know that in November, instead of waiting till tax season, there's a few positive or a few pluses to doing that. Okay. First of all, usually speaking, if I made the money this year, I probably have the cash this year. So I am a lot more likely to have whatever money I am due in taxes in my bank account in November than, we don't know what's going to happen. Some of us are responsible. Some of us, no matter how responsible we are, stuff comes up, right? Emergencies arise, different things, right? And we may not have that cash come next April when our tax bill is due. So doing tax planning in the actual tax year, November-ish, we're going to say November, will give us the number. Okay, this is how much tax we're going to owe. We have it. Let's pay it in now. Let's make a fourth quarter payment and get that tax paid in. All right, so that's the first. So the first benefit is just knowing, like, what is our tax bill going to be? The second benefit is being able to pay that tax liability when you actually have the cash. And the third benefit that we found, which is kind of a bonus benefit, it's nothing we really thought about until we started doing this, is that it makes people a lot less likely to procrastinate on their taxes. Because one of the number one reasons people procrastinate on filing their taxes come, February, March, April of next year, is because they just don't want to look, they don't want to know how much they owe, right? They're like, I know I owe money, but I'm just so scared of it. I want to wait till the last minute to pay it and know it, so I don't want to deal with it. If you handle it now in November, I say now, it's almost October, right? But if you handle it at the end of the year, right, in the tax year that it's in, then you've handled it, you've hopefully paid it like we just talked about. And then, so come tax time, you're like, I'm good. I owe no money. I might even be getting a small amount back. Like, I'm good to go. All right. The other benefit of doing this is that when you tax plan, you do have to get your finances together, right? So if you're one of those people who waits until tax season to do your business finances or to get, all of your stuff organized, doing tax planning forces you to do that earlier, which will also prevent you from, because that's the other reason people procrastinate. They just don't want to deal with it, right? They don't want to collect the documents. They don't want to get their business finances up to order or up to date, right? But if you engage in tax planning, you've already done all that. You've done, we do it in November. So the only thing you might have to do is, update your books for December and then collect all those tax documents that you've received. But, put them in a nice little folder. You're good to go. Okay, so when do we need to start tax planning? Client of mine will start that in November. Emails will probably start going out. I want to ambitiously say middle of October, but knowing how crazy this year has been, I'm gonna just under promise and over deliver. We'll say November. So in November, and guys, tax planning only takes a couple weeks. It's like we say it's time to go. Here's your list of things you need to collect. You send that stuff to us, and it's a pretty fast process once we have all that. All right. Let's see. There we go. So Paula says, should you wait for 2020 fourth quarter 941X refund to file 2020 taxes filed in February 2021? Should you wait for so you are saying, Paula, I'm guessing you're saying you filed the 941X in February of 2021. And you're asking if you should wait for the refund to file. I wouldn't, because unfortunately we're seeing turnaround times on these refunds across the board. Okay, I've had some clients, and on the X's, I personally have not had any clients or contacts that I know have filed a 2020 941X actually received their refund yet. Some people have. I'm not saying nobody has, but nobody I directly know has. All of the, and when I say all, it's probably a dozen people. A dozen people that I know have filed 2020 941Xs for that ERTC credit refund, haven't received it yet. Based on my accounting forum, some people have. And I know that 2021 money has started going out. So it's hard to like, because there doesn't seem to be rhyme, reason, or a pattern to who's getting their money and who's not. This holds for these ERTC credit refunds. It also holds for just 2020 tax return refunds. It's just all across the board. So back to the question is, should we wait for the refund in order to file in order to file your 2020 taxes? I would not, because if you do not get those taxes filed on time, your 2020 income tax return filed on time, there's late filing penalties. So I would get it filed, right? And if for some reason because you've already adjusted your financials to account for the 941X, your financials that you're using for your 2020 tax return should be correct. Everything should tie out. Your bookkeeper should be able to handle that, or your accountant, bookkeeper. The only thing, so you filed your 941X, your books are tied out and up to date and tied to the fact that you've filed those amended returns. Now you want to file your 2020 income tax return. Do that as soon as you can, just because you do not want that to be late. I'm assuming maybe you're Schedule C if you haven't filed yet. If you're an S Corp, you're already late, so you definitely want to get that filed before October 15th, so you only have 1 month of late penalties if you're an S Corp, a partnership, or a C Corp. But if you are a Schedule C, Paula, then I would file your tax return as soon as possible. And if for some reason you do not get that refund, if for some weird reason they deny it, you can file an amended return. But I don't know, there's no reason to believe they're going to deny you that refund. So there's no reason to think that that's going to be an issue. So players, as I was about to say, send me an email reminder. I will send them. Well, my team will send them. Somebody will send email reminders about tax planning. I promise. Okay. Excuse me. Not COVID. Does anyone else feel like that? Like anytime they cough or sneeze, you have to be like, it's allergies. I don't even know if it's allergies anymore. But I've had like just allergies. We're going to call it allergies, like on and off all summer. So, okay. So I felt like there was one more thing I want to talk to you guys about. Let me pull up my notes. Now, like, hashtag not COVID. Like, I swear. I mean, yeah. Shoot, I had one more thing I wanted to talk to you guys about, and I don't remember what it was. Sorry. So, all right, filler time, right? So the one thing, guys, that I've gotten a lot of questions about, not just like recently, just over the whole summer, is from businesses who are either starting out, so they're business owners who are just opening up their business, or they're sole proprietors, right? Sole proprietor being you're running a business under your social security number. And they've asked me, okay, do I need to set up an LLC? What do I need to do to set up an LLC? When do I set up an LLC? All those questions. I actually have a YouTube video this week. That's what this week's YouTube video is on, is kind of determining if it's time to set up an LLC and how you go about doing that. Let's talk about that just real quick. So the biggest difference, you guys, between being a sole proprietor, again, meaning you run your business under your social security number, and creating an LLC, meaning you get a new tax ID number. It's a totally separate legal business entity. The difference between those two, there's no tax difference when you go to file your tax returns. Okay, both a sole, or let's see, I forgot which hand I used for what. Sole proprietor and a single member LLC, both of those, your activity is all going to be reported on your Schedule C within your individual 1040 tax return. All right, that's all the same. What's different is when you complete your W-9, that says this is who I want payments made out to. When you're a sole proprietor, it's to you and your social security number. When you have an LLC, it's to your LLC and your LLC's tax ID number, their FEIN. Okay, that's the only tax difference. Okay, the difference between these two is a legal difference. And if you check out my video, I think I say hashtag not a lawyer like 4 different times because I am not a lawyer. This is not legal advice. But what that LLC, what that LLC does is it creates a shield around your business that if somebody were to sue or go after your business, what the business owns is separated from what you own personally. All right. So that's the biggest reason. Again, from a tax point of view, there's not much. I know a lot of people like to set up LLCs because it seems more professional. They want to use a specific name, things like that. But from a tax point of view, operating as a sole member LLC, single member LLC and a sole proprietor essentially turns out to be the same. Keeping in mind, if you've ever had a conversation like, hey, I want to do an S Corp, someday I'm going to want to, make an S Corp election. You've kind of heard those things. A sole proprietor cannot make an S Corp election. You have to have a LLC or some other type of business entity set up in order to make an S Corp election. But those are really the only differences. All right. And if you have more questions about that, definitely check out the video this week. It's pretty good. What else? Let me peek at, no more questions. Y'all don't have any other questions? All right, let me peek. I have I have my filler cheat sheet that I closed. Cool story, bro. Thank you, Joyce. Let's go. So I switched from sole prop to APC. I opened up another office with a different business model. So I had to set up a new business name in APC. Do I have to file separate tax returns for each business? So what it comes down to is what the tax ID or the social security number of the payments is going to, right? So I switched from a sole prop to an APC. I opened up another office with a different business model, so I had to set up a new business name. Yes. So Joyce, elaborate a little bit. I know we've talked about these things, but I don't know if we've talked about it this much in detail. So when you switch from a sole prop to a PC, was that mid-year? Guys, typically what you want to do is make these changes. This leads to a very good tip, is make these changes on effective January 1st. All right, because in this situation, so let's use me. So I am not me, but I'm giving an example. So I am running a sole proprietor, right? Let's say I'm a photographer. I don't know. So, and I've been operating as a sole proprietor, meaning payments have been coming to my social security number, right? So for the first half of the year, Joyce says March of 2021. Okay. So let's use that. Let's go ahead and use March 21. So for the first 3 months, all the income that I received was under my social security number. Okay. So let's say I made $10,000 in that first 3 months. All right. Technically that $10,000 needs to be reported on a Schedule C under my social security number. Okay. So there's one Schedule C for that activity while I was a sole proprietor. Okay. Then I switch and I get a tax ID number and I incorporate however you want to. I don't want to use the word incorporate. Sorry. I become a legal business entity, a separate business entity, whether it's a PC, LLC, doesn't matter. Okay. March 2021, I change. Now all my payments are coming to my business under my business tax ID number. Okay. That's a separate tax return. Now, when I say separate tax return, in this instance, I just mean 2 Schedule Cs. So there's a Schedule C when you were getting it as a sole proprietor, and there's a Schedule C for the activity you had as a business, as an LLC or a PC in this instance. All right. And so if you have a tax preparer, we have a couple tips, tricks, and nothing illegal, but we have some ways to make this easier for you. Because it's because we know how to do it. So there's a few different not loopholes, but tools you can do to make this easier. But in the spirit of explaining this easily, yes, you would have to have a Schedule C for the time you were a sole prop and a second Schedule C for the activity done under your tax ID number. That goes the same for a partnership, you guys. So let's say I'm in business by myself, right? And then in the middle of the year, I decide to be in business with Wendy and we form a partnership. Okay. I only picked on Wendy because she's here. All the activity that my business did for that first half of the year when it was just me, that's one business. That's one Schedule C that I have to prepare. Okay, then when we got into business together as a partnership, we formed this legal entity. We are now a partnership. Now for the June through the end of the year and ongoing, we have to file a separate partnership tax return for that activity. Okay, so basically the simple answer is each tax ID number has to have its own tax return or form within a tax return, which also means, you guys, if you're using QuickBooks, Xero, any sort of bookkeeping software, you also should be having a separate file for each of those as well. We have a lot of clients who try to commingle and use one QuickBooks file for 4 different businesses, but general rule of thumb, one QuickBooks file per tax ID number, one tax return or form per tax ID number. Cool. All right, you guys, such great questions today. I'm so glad y'all showed up. It doesn't happen very often, but every once in a while, nobody brings questions, so I'm just BSing. So I was trying to think if there's, and you guys, like I said, there's not really a lot of updates going on, but if you guys have any questions, I know that PPP forgiveness, right, has been a big thing because your first PPP loans from last year are definitely able to go through the forgiveness process and probably at the point where they need to be going through the forgiveness process. Remember, quit bookkeeping, accounting for that. So when you got the PPP loan, it was a liability on your balance sheet. Okay. Whenever it's forgiven, so let's assume it's forgiven this year, most of those first round of PPP loans should be forgiven in 2021. Your liability gets cleared off and it goes to you want to put on your P&L and you want to make it its own line item, you guys, because it is non-taxable on a federal level. Okay, so you do not want to, just put it in other income or put it into income, because then if you're doing your own tax return, or your accountant isn't going to know that chunk should be tax free, tax free. So you want to create a separate line. What I'm telling my clients to do, and every bookkeeper and accountant is different, so definitely check with yours, is I am creating or telling my clients to create an other income account called non-taxable forgiven PPP, something like that. Sounds very long, but we're going to use it 1 year and it's going to be gone. So it'll go on your P&L as other income, non-taxable on the federal level. There are some states, guys, that did not follow federal guidelines. All right, I have them. Oh, I had them listed somewhere. I don't have them listed. There are states that specifically say, no, forgiven PPP money is income. You need to include it. There are a handful of states that said, sure, PPP income is not taxable, but you also can't expense the payroll you use that PPP money on. And there are a number of states who haven't said anything. Well, most states have said, we're just going to follow the federal guidelines. So definitely check with your state or with your tax preparer. Let's see. Blair says, car buying, personal or business? I'm looking into it. Great question. So my answer, it is going to be very specific, and Blair, we can definitely talk about this. We can talk about this on a one-on-one level, but generally speaking, all right, so you want to buy a car, it's going to be used for business. If it's going to be 100% used for business, meaning you have another personal car, do I mean that you're not ever going to use your business car to do personal stuff? No, but what I'm saying is you could say that this is 100% used for business. And this is on video, so I'm not going to give you guys anyway, sorry, tangent. So if you're buying a car that you're like, yes, this is going to be used for business 99% of the time, okay? Put it at, yes, the business can buy it. All of your expenses can run through your business. If you're an S Corp, this is the way I definitely recommend you do it because the business personal use gets a little more difficult with an S Corp compared to if you're a Schedule C business owner. I'll talk to you in a second. S corp. However, you do not have to buy the car in the business name. Check with your state, because there may be legal rules that say, no, 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 if you're going to use this in the business, you have to buy it under the business and you have to insure it as a business vehicle. That could get pricey depending on what state you're in and what your insurance looks like. So definitely check with your insurer and your state and figure that out. But generally speaking, like you can have a car that, like I can have a car that I 100% own personally, but that I say is 100% business because I legit only use it for business. So they don't look at the title on the car and say, oh, it's under your name, Brianna, not Bree Beers. So that's, nope, you lose that. They look at the actual usage of the vehicle, you know, and if you get, I'm talking about if you get audited. Okay. If you're a Schedule C business, it's a little easier to do the business use mileage part, you know, type thing on that front. Okay. Let's see. Okay. Joyce, I drive my car to 2 offices every week. When I purchase gas, can I pay with my business debit card or Visa card, or do I pay with personal card? Again, so I'm going to tell you that every person's different, every CPA is different, every account's different. What I tell my clients to do is run, if their business vehicle is used at least 50% of the time, right? Then I tell them to run everything through their business books. And then at the end of the year, we will pull out what is personal use, because it is easier to track your auto expenses if they're all on your business card than to try to go back into your personal. That said, if Joyce, it sounds like if that's the only thing you're doing is driving to 2 offices every week and it's just a small use, I would just take the mileage. I would log your mileage. Do not put the auto expenses on your business. Put them personally. Track your mileage, and then at the end of the year, we'll take that standard mileage deduction for the business use of your vehicle. That's the easiest way to do that. All right. Oh, guys, I'm out of time. Last one. If you remodel your home to add a business office that is 90% used for LLC, can you write off the materials, labors, etc. used for adding an office? This is a great question, and one that gets a little convoluted. So there are going to be accountants that, and this is all, guys, this all comes down to risk tolerance and, you know, what you're willing to do. So what I'm hearing, let's see, this is DV. Okay. What I'm hearing is right now you have your house, right? Are you taking a home office now? I don't know if that really plays into my answer, but I'm just curious. So what we're saying is right now we have a house. Let's say it's a $500,000 house. Okay. And now we are adding this brand new business office. Okay. Here's my stance, and mine is, so guys, I'm not conservative or like crazy. You know, I'm right in the middle. I will tell y'all, like, this is the law. This is what some people get away with. And here's what I'm comfortable telling you to do and why. So anyway, so what I'm going to tell you is the rule. So what the rule says is so we have your house that's $500,000, okay, before the remodel. All right. And now we've added this business office. Let's say you put $50,000 in it. Let's just make it easy. Okay. So now our house value is $550,000. Okay. We get to, let me back up one more. Sorry. Let me back up. So before I start talking about the add and the remodel, let's talk about what actually home office. Sorry, guys. So home office. I have a $500,000 house. Okay. I do the square footage calculations. I find that 10% of my house is my home office. Okay. That means that I get to take 10% of all my home expenses, right? My mortgage interest or my rent, my utilities, my HOA, all those things, right? You also get to take depreciation, meaning that your $500,000 house divided by, I need a calculator because that's why accountants are good. We have calculators, divided by 27.5. hold on, 500,000 times 10%. So 50,000, the equivalent of $50,000 of our house, of our $500,000 house, is our home office. That's what we valued our home office before addition. Okay, this is just generally speaking. So that $50,000, we don't take that, we depreciate it, meaning we take a portion of it as an expense each year, and that equals $1,808. $1,818. So what that means, what that's telling me is as my home office, okay, each year I get to take, like I said, 10% of all of my home expenses plus that chunk of depreciation. So I get to take $1,800, $1,818 in depreciation on my home office each year. Now I'm remodeling, okay, and I'm remodeling and I'm adding this wing to the house or office, whatever you want, okay. Now I've increased my home cost, right? So now my house is worth $550,000, okay? But now let's say my office is bigger because I built this beautiful big new house or new office space. And let's say now my office space is 15% of my total house because, yeah, let's just do it. So times 0.15 divided by 27. So now I get to take about $3,000 a year on depreciation on my home office. So the question comes down to, if you remodel your home and add a business office, it doesn't matter that it's 97% used. It's your home office. We're going to say 100. Don't ever say 97%. It is your home office, guys. It's 100% office use, okay? Pro tip. Can you write off the materials, labors, et cetera, used for adding the office? So the answer is no. You cannot write off the cost of adding that home office. What you can do is add it to the cost basis of your house and then increase the amount of home office depreciation you take each year. I could have made that a lot easier. Sorry. Sometimes when I'm thinking through, guys, it just takes me a minute. So, okay. Great questions today, you guys. So good. I've got a jet because it is a tax deadline day. I got some stuff to do. But remember that sometime, I want to say Friday, but it depends on how my team is. Sometime in the next few days, next week's live will be, the event will be created. And if you guys have questions that come up before next Thursday, post them on the event. That's where I check right before I jump in here to see what questions I have to answer in case y'all don't bring any to the live. That way you can ensure that your questions are answered. And if for some reason you can't make the live, you can go back and watch and know that I answered your question. All right. All right. You guys are awesome. Thank you. I hope you guys have a great Thursday and a great weekend. Happy October starting tomorrow. And I will see you guys next week. Bye.